What is good, Tesla family? It's Ray J back with another video. And this one will break down what's going on with Tesla stock, what you should be watching for the pre-market, some very important levels to watch for, and also what's going on with the news that just dropped that's causing the market to cool down a bit. I'm going to break down all these different levels and talk about SPY, Tesla, the QQQ, and many tickers out there. But before I do anything like that, let me just mention a couple of things. Firstly, I am not a financial planner, so take none of this as financial advice. And also, if you guys can, please smash the like button if you want to see more videos like this. It not only benefits me, it benefits the entire Tesla community as a whole. And don't forget about the Webull link. The offer ends very soon. Deposit any amount of money and you're guaranteed up to 12 free stocks. Anyways, now let's talk about the market, what's going on with everything moving forward. The news just dropped and the jobs numbers have come out. And unfortunately, we saw the private sector companies add 497,000 jobs in June. That is more than double what the expectations were. Initially, when the Fed said some very hawkish things, the market was holding up quite nicely, showing some strength. But now the interpretation of data has shifted because of the Fed. What do I mean by this? Because what's happening is the jobs numbers are very strong. The private sector adds 497,000. We also saw leisure and hospitality add 232,000, sorry about that. And then construction added 97,000, and then trade and transportation utilities added 90,000. What does this have to do with the stock market? Well, here's the answer. When all these job numbers came out and they're suggesting the economy is still strong, this is not good for the stock market right now because the Fed told us that if the economy is too strong, they're going to continue to tighten, and they also warned us of the risk of a potential recession that could be coming. Right, that's what the Fed ended up saying. So please be very careful when all this data ends up dropping. We have even more data to come very soon. So the market's interpreting data differently now. Strong job numbers suggest more tightening from the Fed and a more increased chance of there being some sort of recession or more economic contraction in the future. And that's why the stock market is reacting the way it is. Now, going forward, we have some more data that's going to be dropping very soon. Let me just add that we have Logan giving a speech right now from the Fed. Then 15 minutes after the market opens at 9:45 a.m. Eastern time, we have the PMI reports coming out. So we're going to be seeing some volatility because of this. And then the biggest thing coming out at 10 o'clock a.m. Eastern time, or 30 minutes after the market opens, is the JOLTS job numbers. So we're going to be watching this very carefully. The job openings and then the job quits are going to be coming out. If the job openings are hotter than expected, the market is going to react negatively. If this data is pretty decent or like very close to what the expectations just so happen to be, we could get a very mixed response. And if all this data is, in my opinion, like lower than expected, we might see the market, continue to hold up and maybe even like bounce if this data is decent. So watch this all very carefully at 10 o'clock a.m. It's going to be very important to look at this. And then don't forget, that's 30 minutes after the market opens. Just be prepared. Now, the 10-year Treasury yield has jumped about 4% after all these job numbers. And finally, don't forget that we have to be managing expectations with all this data dropping. And finally, don't forget about Janet Yellen arriving to China. So this could affect some Chinese stocks and just other factors like that, which are going to be very, very important. Anyways, now let me just add what's going on to Tesla and some very important levels that we need to know about. Looking at Tesla's things holding up around this like 278 support for the time being. But if Tesla were to break down, the next major support zone is going to be in this 275 to 276 area. And so far, it's still trying to hold up. It's still in its range, so nothing too horrible is happening to Tesla. But if it tries to pump to the upside, you're going to be watching resistance at the 200 EMA around this $280 level. If it gets above 280, watch 282.5 to about 284. And if it breaks those levels, there's some resistance around this 285 zone. And then once it's above 285, Tesla's going to make its way all the way up to the higher 280s, in my opinion, if it could get a break to the upside. So for now, Tesla's kind of choppy, kind of sideways, but I still believe that as we approach earnings, Tesla's going to start pumping and get closer to $300. I still stand by that. I have not changed on my word. I still believe that's going to happen. But for now, with all this data dropping involving the Fed and all these hot numbers, the market is getting a slower reaction, and this is causing Tesla to trade a little bit sideways. So you want to watch these levels very, very carefully. Now, let me add that on the bigger time frames, Tesla is still looking like this. Let me just close all of these up. It still is holding up quite nicely, and we are also above our major 1-hour 50 EMA around this 275 area. So that's going to be the very important support to watch for, the most important one out of everyone for now. Because the bears, okay, all the bears out there are going to want Tesla to break below 275, and they're going to try to drag it below this. If they're successful, we could see Tesla, start sinking a lot more to like 270 or lower if they break us below 275. If Tesla manages to bounce either off 275 or 278, if it bounces in this area, then we could see Tesla make its way up to fill this gap up here to like 282 if it gets above 280. So watch 280 as some resistance. If it fills this gap, that's going to be a good sign. And if Tesla breaks 285 specifically, 285, if it manages to break above that, then it has the potential to push up even higher to get closer to 290. For now, it's kind of in the middle, still in this like zone. So we're going to be watching this very carefully. So watch all the data that's dropping 15 minutes and 30 minutes after the market opens, especially those JOLTS job opening numbers. That's going to be very important for Tesla and the entire market. Now, let me just briefly go over SPY. SPY is starting to sink a lot more. On the 4-hour time frame, we have the 50 EMA around this 438 level, which is what could be tested. However, it's not the end of the world just yet. If it breaks below the 50, then it has potential to start sinking down to like 436. The 436 zone is where we have a lot of like chop, that 436.25 to 436.65 level, that entire zone right there. There's lots of chop around there. If that fails us, there's going to be 435 and then potentially 434 below that. But we'll see if it bounces off the 50 EMA first. If it tries to bounce, you're going to be watching resistance at 440. Then 442 is going to come next for that gap fill. That's going to be very important. And above that, there's 444. Anyways, so watch these levels very carefully. Expect some volatility for the first 15 and 30 minutes. And just be very careful with all the data dropping very, very soon. For Aapl, the same thing is going on. I mean, it is going to be testing the 50 EMA now in the 4-hour time frame. We're going to be seeing if Aapl could hold 189, if it bounces or not. If it breaks below this, we'll be seeing what the data causes. Because if it does break below this, there's going to be support at 188.5. If that fails, it's just 185. If it bounces, we have this nice unfilled gap around this 191 level, and it could go higher to 192.5, potentially about 194. But just watch support and resistance very carefully just to be safe. And then for the triple Q, it's testing the 50 EMA as well. This is where it's trying to base at this 366 level. If that fails us, it's going to come all the way down to about 363-ish. 363-ish. Sorry about that, guys. 363-ish is going to be where the level is to watch for if it does break below this. If it does end up breaking below that, we're going to see 360 to 361. If it bounces off this 50 EMA, then I'm going to be watching this thing make its way up to about 368, and potentially around this 370 area, which is where we have this unfilled gap. So I'm just going to be watching this carefully to see how it reacts to all the data. So watch both support and resistance. And until then, I want to just thank you all so much for listening. The video was looking quite nice with that inverse head and shoulder structure still holding above the 50 EMA on the 4-hour time frame. But if it breaks below this 419 level, watch this thing come all the way down to about 416. 414, 411, 409, and etc. If it bounces, it has more potential to push up back to 430. So watch this carefully on the video. It's still holding up quite nicely. There's this nice inverse head and shoulders that's still valid, but just be very patient. And until then, I just thank you all so much for listening. So get ready for more data releases. And until then, I'll see you guys in the next video. Tesla in the market to the moon as the long term is still incredibly bright. And peace out.